Okay, everyone. Sorry for the tech issues. Hopefully we're good. Just a quick audio check and then we can get started immediately. Okay, audio seems to be good on my side. Let me know if there's any issues. We'll get started with the general advice and risk warning disclaimer. Note that any advice given is deemed to be of general nature, as the information or advice given does not take into account a particular objectives, financial situations, or needs. Therefore, at all times, you should consider the appropriateness of the advice before you act further. CFDs and Forex are leveraged products that carry a high level of risk and are not suitable for everyone. You can lose more than your initial deposit, so you should ensure CFD and Forex trading meets your investment objectives. Strategies and charts used in this presentation are, for example, only. You are reminded that past performance is not indicative of future performance. Okay. So, you guys are probably wondering what's going on with the US dollar and stuff like that. We kind of expect the movement on this one here. That was pretty much since last week. Didn't expect this to come through before CPI numbers though. So here's the dollar index. Let's take a look at the dollar index. I think today is actually going to be key because if we take a look at the dollar index, it's actually right now it is below 110. If it closes below 109.50, then it will actually be below the Ichimoku cloud. I think we do have a little bit of support coming in at 109.50. Take a look at the movement here on the dollar index. This is actually going to be interesting because we saw a little bit of a recovery last week, and then we saw Monday it was pretty much in a free fall, and then we got Tuesday, and today we have what it is today. But if you take a look at the rejection on Friday, pretty much on Monday, that was basically at 78.6%. So we are actually kind of failing a little bit on the dollar index here. This is kind of in reverse of what we saw on the pound USD and the euro USD. That's why last week I actually mentioned that we could be in for a little bit of a change going forward. This could be the moment. I just cannot confirm it until we have that CPI numbers tomorrow. All right. So this coming in a little bit earlier than the CPI number is actually a little bit troublesome because right now, if we take a look at the whole movement here, we do have a lower high, we do have a lower low, and that's basically that. But if we pause a little bit, and the reason why I need to wait for that CPI number is that we need a little bit more of a confirmation. Otherwise, this is going to be more of a descending channel in an uptrend, and it'll pretty much work like a flag. If we count it, can we still call this a flag? I don't think we can call this a flag because it's been like 29 bars. Flag has a limit of about just 20 bars. So we don't call this a flag anymore. But with the overall view on this one, let me just hide the Ichimoku cloud. Assuming you trade without Ichimoku, this is going to be it. So there could be a few misconceptions right now with what the market is looking. If you don't have any other trend indicator with you, this could be problematic because you might be looking at this as a potential descending channel for a potential breakout to the upside. That could still be in play, but I'm just going to frame it a little bit better because some of you guys might look at this and say, you know what, this could be an opportunity. This could break even higher. We could see a stronger US dollar. Yes, that's actually still possible. But in terms of the timing right now, in terms of where the momentum is heading right now for the dollar index, momentum still points to the downside. And if we bring up the Ichimoku cloud, this is actually day one below the Ichimoku cloud. We need to see a close today, right? But if we wait for a close today on the US dollar, then tomorrow is actually going to be CPI. If there's any surprise upside on the CPI numbers, then it could ruin a lot of things. Okay, so and people are saying it's the congressional election going on in the US that happens every 2 years, right? That's kind of influencing it. I don't really think the US election has anything to do with what the market is doing right now. If we take a look at the stock markets, yes, I think this is more on media trying to fill in the gap here, talking about the US congressional election before the CPI numbers, because we don't have a lot going on this week. So, yeah, you might get that. This is probably the issue. People are saying, if there's a gridlock in the election, then if the Republican wins more seat, it'll create more of a bipartisan government. But is that a good thing? Some people say, yeah, it could be a good thing because one side kind of really pushed their agenda really far with a bipartisan government. But right now, if we take a look at that, I don't think this matters a lot. So whatever the market is doing right now, I need you guys to be a little bit more cautious. So I'm not looking for a potential break to the upside at this point in time. I'm really looking at, could we potentially see a weaker US dollar going forward? I think that's the much bigger question. Now, in terms of, if we could have that, I don't think it's going to be a home run. I don't think this is going to slide in one direction unless the CPI numbers tomorrow comes in really, really badly, below market expectation. But let me just refresh a little bit. I think the core CPI, we need to see the core CPI drops. The expectation was that core CPI, I think, let me just bring it up right now. All right. So inflation rate tomorrow, the consensus was for 8%, right? From 8.2%. So if we see any headline year-on-year inflation below 8%, then we are likely going to get a weaker US dollar. The core inflation rate is expected to drop down to 6.5% from 6.6%, as long as we don't gain on the core inflation, because core inflation is ex auto and gas. So I think a lot of people are actually going to be focusing on the core inflation numbers. I think that was the trigger last month. All right. So core inflation year on year is expected to drop down to 6.5% from 6.6%. Now here is where it gets a little bit more dangerous. The month-on-month inflation rate is expected to go up to 0.6% from 0.4%. The core inflation rate month-on-month is still expected to drop down by 0.1% from 0.6 to 0.5%. Okay, so there could be a couple scenarios, but I need, regardless whether or not you trade the fundamentals or not, tomorrow it's going to be it's going to impact a lot in terms of how it's actually going to move the market. We don't right now for the US dollar to actually weaken, for the Euro USD and the Pound USD to transition to an uptrend, we basically need to see an inflation number that is actually low. Right, and we need to see the inflation number goes down. So in that context, we really want to see the year-on-year inflation or the headline inflation drop down to 8% or below 8%, maybe 7.9%. That's going to drive the US dollar weaker. Okay, if we have the core inflation come out at 6.5%, that's completely fine. If it comes out at 6.4%, that's going to drive the US dollar lower. Now, we've got four data to watch out for tomorrow. Basically, we've got the core year-on-year, core month-on-month, year-on-year inflation, and then we've got the monthly inflation numbers. So we've got four data that's going to come out tomorrow. Some of the websites that you use for economic calendars probably doesn't give you all four. So be a little bit mindful of what's really going on tomorrow. Because if two of these four comes up stronger than expected, then we could actually see a surprise to the upside. Now, in terms of how much stronger than the consensus it is, even a 0.1%, that's going to drive the market well. Okay, so you guys need to be really careful with what's really going on. Right. So yeah, let me put things into perspective before we take a look at the Euro USD, the Pound USD, and the Dollar Yen. We kind of expected the Pound USD. We saw a little bit of a change on the Euro USD. But I really want to bring your attention to the dollar index, because we need to take a look at the dollar index and we take a look at the momentum here. It does have a little bit more room to go to the downside. I think key levels for the dollar index is that I would place it at 109.50. So if you have access to the DXY or the dollar index, if there's a daily close below 109.50, this will pretty much shift this to a potential change in the long run trend, right? Because if we take a look at when the last time the dollar index was actually below the Ichimoku cloud, that was January 2022. Now, The reason why I'm a little bit more cautious and I really want to wait for the CPI numbers, because this could happen, right? So let me bring you into perspective. We could actually see price trade below the Ichimoku cloud, and then it reverses and it pushes up even higher in just a matter of days. So we're not really clear yet. So I think there's a lot of misconception. A lot of people are actually getting impatient. People are actually just assuming that, yeah, the dollar is going to get weaker. But more on the cautious side. I really want to wait until this week is over. At least let the CPI numbers comes in. And then we pretty much have about 3 weeks to figure things out going forward. So that's about 15 days on the index, right? So just keep that in mind. There could be a potential for that to happen if we see price transition below the Ichimoku cloud. So we haven't seen this happen since mid-Jan, right? So this is a huge thing. Now that in reverse, if you take a look at the pound USD, we already saw that transition pretty much happen on the 28th of October. So this is not new. We were expecting this. We were expecting that pullback to happen last week. All of that happens. We expected a little bit of a bounce, between 61.8% to 78.6%. If you guys think I didn't talk about this, maybe check out last week's webinar. We actually did talk about this. We were actually looking at a little bit of a bounce to happen. We already saw that bounce happen, and we have price transition above the Ichimoku cloud. It's just that we haven't really progressed higher at this point in time. There's a little bit of a concern here, because if this happens after CPI numbers, it's fine. We could have that momentum. We could have the weaker CPI numbers to actually drive this up. Right now, we don't have that. So there's a lot of uncertainty going on in the market. I think a lot of people are actually jumping in a little bit too early on the train here. A lot of people are assuming, the pound USD has pretty much, switched trends and stuff like that, because we're looking at, a higher high, a higher low, right? So because if we take a look at this one here, we are looking at a market that creates a higher high and a lower low. So the expectation is that there is a change in the trend. We anticipate that change in trend, right? It's just that it's really hard to confirm it right now. And I think people jumping in on that train right now could be a little bit too early. There's a lot of uncertainty going on tomorrow with the CPI numbers. There was a lot of surprise to the upside on the CPI numbers the past few months. We saw that happen. We saw how volatile CPI was for the past 2-3 months, right? You guys saw that. You guys been trading the market. You guys saw that one day in the market where everything could just change. So yeah, if you got the green light by having the CPI lower than what the market is expected, then yes, do I expect a potential change in trend for the pound USD and the euro USD? Yeah, I think so. I think we could potentially see a stronger pound USD. We could see a stronger euro USD going forward, maybe a month leading up to the holiday seasons before the market gets quiet. But right now, it is a little bit too early. This is really concerning right now. I expected this run up to happen post CPI, not pre CPI. So if the pre CPI market moves like this, we saw last month, we've got the pre CPI numbers last month. It was pretty hectic. We saw pretty much a reversal in the market, right? So do be careful, because if you trade without any trend indicator in the market, maybe if you just take a look at the pivots, then you could be looking at, price is trading above the pivot. It could push higher. In terms of key resistances, we do have 1.1650 to 1.1750. That's still going to be the key resistance. How does this impact you in terms of intraday trade? I posted yesterday on the Telegram channel. I think some of you guys got it on the Euro USD, Pound USD, Dollar Yen, intraday wise. But if you're looking for a swing position, this is not time. If you are looking at the market and say like, yeah, this is quite a long-term decision, I think everything's going to change. It's a little bit too early for that. Okay, with that said, let's take a look at the Euro USD next. The overall general trend on this one here, you might look at the Euro USD and say, yeah, you know what, this is above the Ichimoku cloud, etc. This is above parity. The Euro USD is going to get stronger. It could, but I mean, if we take a look at where it fails yesterday, it was pretty much failing at last week's high. Sorry, 27th of October high. So you're still around that critical key resistance level at 1.01. We haven't seen any progress higher on that one. Again, I think this might be a little bit too premature if you guys think that the trend has changed overall. We just don't have that. Okay, so let me take a look at the Euro USD on a closer context. This was from Monday. So some of you guys got that. There was a breakout on Monday. There was a hidden bullish divergence last night, yesterday, and I posted this out. So hopefully some of you guys got it and got out, right? So we have that yesterday. We don't have this today. So we actually have the market that's, could potentially go down even more. We just don't have that divergence as we're looking at it right now. In terms of can it survive, I'll just clean this off. So our key resistance, we got 1.01, right? We got 1.01. In terms of key support, obviously we got parity. So for those intraday traders looking for a long on the Euro USD, might want to be careful a little bit, because in terms of correction, we could be looking at a little bit of a correction here, like so. This is still bouncing off 50%. We could potentially see a move down towards 61.8%. Is it going to be an extremely crazy night? I don't think it's going to be a crazy night, especially leading up to CPI numbers tomorrow. The election results are still being counted in. Again, I don't think election is going to matter a lot, but for the Euro USD, there was a question just now. Can we go long on the Euro USD? Can we go can we go long on the Euro USD? Can we go long on the dollar yen? The way with the Euro USD right now, you might be able to go long the Euro USD, but we need further confirmations. It doesn't have to go down to 1, right? But if you take a look at the momentum here, let me zoom out. Sorry, let me just enlarge the momentum here. This is not a cross on the momentum, so this is still a little bit too early. The stochastics could actually go down, right? If the stochastics go down, so that means there might be room for this one to go all the way down to 61.8%. But if you take a look at where the 78.6%, the 78.6% is actually closer to a dollar. So it is closer to parity, all right? This one here, that was on the breakout. We can get rid of that. In terms of key support level, we still have about 99.75. So again, I do anticipate a little bit of a pullback on the Euro USD. So adjust accordingly. Either you have a long position on the Euro USD and you haven't got out from it yesterday, or you might have a short on the Euro USD. If you do have a short on the Euro USD, then mind your targets, because we do have 61.8% and 78.6%. To the downside, we might see a little bit of support there. But if you take a look at how far away it is from the Ichimoku cloud, it's not that far. It's only about 3-4 hours away from the Ichimoku cloud, right? What I'm trying to say is we could actually see price in the next 3-4 hours could potentially go down to 61.8%. Might find a little bit of support before it actually bounces up. So that could play out. Okay, but right now in terms of the momentum, should you be going long on the Euro USD right now at this very moment? I don't think so. Should you be going short on the Euro USD at this very moment? You might be able to go short on the Euro USD, taking the remaining position. But let me just give you a few warnings. Your stop loss needs to be above 1.01. Okay. In terms of target level, you could probably only target about $1. So that's going to give you a risk reward ratio that's actually less than 1-to-1, right? You might be risking about 60 pips for a potential 40 pips gain. Okay, so either you already have a short position on the Euro USD, then you can adjust your targets. But if you're thinking of jumping in short on the Euro USD, let me give you a few things. It is about the Ichimoku cloud, so just to put things into perspective, this is how the Euro USD has been going on for the past few days. All right, this is Monday, so we actually see price go up. So it's normal to see that correction happen, but do we anticipate a lower low on the Euro USD at this point in time? I don't think so, because this is going to be pre-CPI numbers. I don't think we're actually going to see a lot of range in terms of volatility in the Euro USD. I think that's going to happen tomorrow. For tonight, I think this is actually going to be a quiet market. So think about it. Okay, so Euro USD, this is the current state with the Euro USD. If you're thinking of going long on the Euro USD, then look for a potential bounce maybe around 1.0025 or at 1, right? I like to trade that bounce. If there's a bounce in what I'm trying to say is you need to have a momentum, obviously, a momentum indicator, obviously. Good to have a stochastics, RSI, or something like that, but I want to see market, crosses up again. If it goes down below that 20 level and then bounces back up, it's even better. But I don't think we're actually going to be looking at, another hidden bullish divergence. It could happen. So if this one moves below 20, then yes, we could actually have another hidden bullish divergence on the Euro USD tonight. But it's going to be really tough. But we basically need that lower low on the stochastics or the RSI. Okay, so with the Euro USD right now, I much prefer to be looking for a long position before CPI happens. Closer to CPI, you need to adjust your position. Either you adjust your stop loss, you lock in some of the profits, or you get out and maybe get back in post CPI numbers. But just be mindful. Doesn't matter if you trade fundamentals or if you don't. But just so you know, around the same time tomorrow, there's going to be that CPI numbers in the US. Right? I just gave you a couple of scenarios there for the CPI. So do keep that in mind. Okay, so that's on the Euro USD. Pretty clear. On the Pound USD, this is actually the hourly is actually within the Ichimoku cloud. So if you got in yesterday or Monday and you got out, that's completely fine. We have that resistance pretty much at 1.1550. So that's pretty much all done and dusted. Right now, price is actually within the Ichimoku cloud. I'll get rid of some of the stuff here. Okay, price is also trading below Tenkan, below Kijun. We might see that right now it is actually finding support, but you need to be careful because if we do break support here, right, that's pretty much at about 1.1425. So if you want to adjust it, it's actually going to be 1.1425. If you guys are wondering why do I keep adjusting it, I do look out for key psychological levels. So it's going to be 25, 50, 175, right? So you got a little bit of support coming in at 1.1425. If it does break 1.1425, we have a stronger support at 1.14. So if you're thinking of going short on the Pound USD, the risk to reward ratio just doesn't make sense, because if you want to trade that down to 1.14, your stop loss needs to be a minimum of about 1.1557. That's a lot, right? Would you be risking 120 pips for a potential gain of 48 pips? I don't think it's worth it. Just be mindful, this is actually within the Ichimoku cloud, so a lot of things could happen. If we do have a break below 1.1425, then the next stop is actually going to be 1.14, right? We don't have divergences. We don't have any divergence at this point in time. You guys might be thinking, hey, you know what, this is a regular class A bullish divergence. Regular divergence is not, because market is actually within an uptrend on the early time frame, so we don't actually count that as a regular divergence. Okay, so be mindful on the Pound USD. So overall, if you're thinking of the Euro USD or the Pound USD, if you get in yesterday, that's completely fine. If you're thinking of getting in right now, you need to plan for your exit before CPI numbers, or at least your risk with the CPI events tomorrow. Okay, so that's the Pound USD and the Euro USD. Next up is the dollar yen. Let me just give you the overall rundown on the dollar yen and pretty much on the daily time frame. Right now, this is actually below the weekly pivot. It is around support around 145.25. We also have a stronger support at 145. Now, in terms of key technical levels on the dollar yen, nothing much has changed, right? We still have key resistance at 150. We've got support at 145, 143. Now, some of you guys are thinking, you know what? I want to get in at 145 because 145 seems to be a strong support. Should you be going in on that support right now? This right now, if you take a look at it from the daily time frame, you're thinking swing positions, and you want to have your stop loss at 143. I would say, you know what, go ahead. You still have 143 as your support level, but why take the risk of about 200 pips when the momentum is still pointing to the downside on the daily time frame? So there's actually going to be a lot of risk involved. Either price is actually going to stick around 145, or the CPI number comes out bad tomorrow and price could actually go down to 143. So why not wait until that CPI number happens? If we do see stronger CPI numbers, we don't really have to worry about it too much, because we've got 146, we've got 147 to jump back in terms of key target. Obviously, we are looking at 150. So I don't think there's a need to rush into the dollar yen, considering that dollar yen on the early time frame is still below the Ichimoku cloud. In terms of the momentum, right now, if we take a look at the dollar yen, and the overall tone on this one is that we might be looking for a little bit of correction to the upside. Pretty much the same level, 61.8%, 78.6%. That's going to be key going forward on the dollar yen. All right, so this is pretty much the reverse of the Euro USD. The importance of 61.8%, 78.6% is pretty simple. That was the previous support pretty much on Monday. Right, price bounces up a little bit and then break down. Right now, this is likely going to get tested as a resistance. If it fails at 146, 146.25, and you take a look at where the 61.8% and 78.6% line up at, they'll line up at psychological levels, right? So I don't think there's a need to rush. If price goes up to 146, 146.25 and fail, there could be a higher probability that is actually going to get rejected pre-CPI tomorrow. Right? I don't want to deal with stuff post CPI because I really can't tell you. I was expecting to be able to read out some of the sentiments before the CPI numbers, but with the market dropping down much faster than what I anticipate pre-CPI, this is pretty much out of the window right now. There's a lot of uncertainty. If you take a look at it from a technical perspective, there's a lot of uncertainty right now because a lot of the momentum got used up in the past 3 days. So price has actually moved. It kind of messed around with the momentum. If it moves post CPI numbers, is actually going to be a lot better because we don't use up that momentum. That momentum has been used up in the past 3 days. So from a technical perspective, if you go blindly and taking a look at price as it is, you might get the wrong picture on the daily time frame. But if you take a look at it, with the different trends that's being shown on the daily and on the hourly time frame, we are not really clear as of yet in terms of where the market is going to get, where the market is actually going to go pre CPI numbers. Right now, I was hoping that I could be able to tell you, I could read up the sentiments before that, but obviously we got jumbled up a little bit. Market moves, the risk assets move a lot earlier than what I anticipated. And also from a technical perspective, in terms of taking a look at it from the hourly time frame, basically an intraday perspective on this one, the overall trend on the dollar yen remains to the downside. So could we be pushing down lower towards 145? Yes, because we haven't even touched 145 yet on the dollar yen. Okay, so that's pretty much on the dollar yen. Kind of hinges on a lot of things. If you're planning an intraday trade tonight, maybe look ahead in terms of 3-4 hours. You might be able to get your entry if there's a bounce in the Euro USD and the Pound USD. If there's a rejection on the dollar yen, then you might be able to get your entry for an intraday short or intraday long. But do not keep this position longer until close to that CPI event tomorrow, unless you have something planned out. All right, if you're thinking you're going to adjust it for swing positions, then that's a different story. But I think there's going to be a lot of volatility coming in tomorrow with the CPI numbers. Okay, so that's the dollar yen. That's a request on gold, so we could take a look at gold as well. Or you want to talk a little bit about crypto? We will definitely want to talk a little bit about crypto today, because I know some of you are crypto holders. There's something going on in the crypto market, right? Crypto community right now. We've got FTX. Think they're going to be bought out by Binance at this point in time, so that causes a lot of storm. Now, gold. Take a look at gold here. I'm going to jump in on the hourly time frame first, because I saw a message on Telegram today that, you know, this could be a flag going on the on gold here. If you take a look at the bars here, we are actually at 20 bars, so we cannot categorize this as a flag. That's number one. In terms of degree of the flag, we are actually not really dropping down a lot. This is actually really flat, so instead of drawing a channel like that, this is more of a horizontal flat resistance that's coming in at about 17.15, right? So we, you know, if you're thinking of trading gold intraday wise, don't think of this as a flag. I would think of this as more of a range bound market condition that could potentially be broken, right? In terms of support for the range, that's going to be about 1706. Now, not going to give you a lot of room, because intraday wise, if it does break lower, we actually do have 1695 as a support, right? If it does break to the upside, then you don't actually have a lot of room either, because you have 1727, 1725 to about 1730 as your resistance. So if you take a look at this one here, risk reward ratio is actually going to be about 1-to-1, and the only way to trade this right now is actually through a breakout scenario, unless you've been holding on long for gold, which is something that we actually take a look at. I believe this was last week or Monday, right? Anyway, so yeah, I'm not sure if this is actually Monday or last week, but someone actually traded up from 1625, holding it to about 1675 before it actually runs up. I think that person is targeting 1725, I believe, and that person should be getting out of that position right now, because that's $100. Okay. Anyway, this is the current outlook on gold. Right now, as I say, with the dollar index, this is pretty much the same thing here. This is transitioning. Are we going to see a break above that? At this point in time, we do not know yet. In terms of whether there's actually any significant change on this one, we don't have any transition on the Senko span. So going forward 26 days, we actually don't have a transition to the upside on the cloud. So overall, I would still see this as a resistance. This was the previous support. That's been a resistance in September, October, and this month we are expecting this range to be a little bit of a resistance for gold as well. Again, it is too early for you to start getting your trades in. If you're thinking an intraday trades, I would say, yeah, you know what, as long as you trade within that range, that's completely fine. But if you're thinking, you know what, I'm gonna go long gold and I want to target 2000, obviously that's not ideal. And if you think we are at resistance and you guys want to just short it, it's a little bit too early to short it. Remember, the past 2 weeks, we were anticipating a potential transition in trends. This is going to apply to the US dollar. This is going to apply to the Euro USD, the Pound USD, Aussie USD, the dollar yen, gold, right? Oil, we were actually looking for a potential transition with oil. It's just that we have a little bit of a hiccup with the China lockdown. Demand for oil starts to fall down again. All right. So that's that. What's my view on the dollar CAD? Let's take a look at the dollar CAD. I believe the dollar CAD on the daily, there was that. Was this? Yeah, this is on Monday as well, right? So if you guys don't know, I actually run Monday's webinar as well, but it's just for the Telegram channel. Anyway, we basically have a shampoo or head and shoulder on the daily for the dollar Canadian. This is actually pretty much confirmed on the close below 1.35, right? But for this one, if you take a look at where this is likely going to head, right? Obviously, you can't go crazy on this one here. In terms of stop losses, you do have a few stop losses that you can place on. If you're thinking of going short right now for a swing, do keep in mind this is actually within the Ichimoku cloud. We're not going to get any traction until price breaks below the Ichimoku cloud, right? Or even breaks below 1.32. But for those that go in on the dollar cat on Monday, I think you guys are still good. But if you take a look at the dollar cat on the intraday time frame, let's say take a look at it from the hourly time frame, this is pretty much like the dollar yen. Price is actually trading below the Ichimoku cloud in terms of correction right now. This is actually a midpoint. So this is still normal. We have 61.8% and we're just struggling at 61.8%. Now, if you take a look at 61.8% going forward in the next few hours, right? Basically about 1, 2, 3, 4, 5. This is going to transition inside the Ichimoku cloud and the Ichimoku cloud tonight. Then the dollar Canadian remains bearish at this point in time. All right, how do you join the Telegram channel? This is actually going to be bilingual. So I do the Telegram channel actually in English and Bahasa. So, but you can, for the webinar, if you jump in on Monday, that's completely fine. You can ask me in English. I'll be able to answer it for you. Just chat customer service. Let them know your account numbers and stuff like that. They'll be able to sort it out for you. They'll send out the invite link. All right. So dollar Canadian on the daily, it does indicate a potential head and shoulder. It's not a potential, it's pretty much confirmed. So if you're thinking of going short on the dollar Canadian, your correct stop loss would be at 1.38 or above 1.38. Now this is pretty far, right? So you either think about going in long for the long run on the dollar Canadian, you're not going to get a good risk reward ratio, right? If you're thinking on the dollar cat in terms of an intraday, the momentum is a little bit flat, all right? But if it fails again at 61.8%, so if we take a look at where that 61.8% is actually going to be at 1.3475, I believe, right? It's pretty much at 1.3475. Take a look at where 1.3475 was. That was the previous support level on dollar Canadian, right? So this is going to be a key resistance for dollar Canadian. If it fails to break 1.3475, then yeah, it could fail. Then we might be looking for more of a downtrend continuation for the dollar Canadian. If it does transition above 1.3475, you need to be a little bit more cautious. Do not go long. Right, because if you go long on that transition above 1.3475, you're actually going to find your first resistance at 1.35. Okay, so it's actually going to be tough. I wouldn't go for a long. If you already have a long position, you should be worried right now because how it is the past few days. Sorry, the past day with the dollar Canadian is that if you're thinking of going long, it fails at 1.3475. Could it fail again at 1.3475? Yes, it could. Could it be that price would not be able to go to 1.3475 and potentially slide down? Yes, it could. So dollar Canadian is not ideal. In fact, a lot of the majors are not ideal because you need to be patient for this one. You cannot rush into thing pre-CPI. It's super, super dangerous. All right, we did take a look at the dollar index, but let me just go through the dollar Swiss first. All right, here's the dollar Swiss. We basically touched base 161.8 on the daily. We can pretty much clear this off. We got support 98, 97.50. I'm going to leave that there. A little bit support 98.50. That was what we were looking for. Okay, so in terms of key resistance, we basically have that 1.0050. I'll leave that there. Anyway, dollar Swiss, if you take a look at dollar Swiss and the dollar yen, it looks about the same. The only difference with the dollar crosses are the dollar cat. That one there triggered more of a bearish movement. Dollar Swiss is still above the Ichimoku cloud. Could we transition below that level? We could, but we need to see a break lower. Obviously, if we take a look at how thick that Ichimoku cloud here, we basically need to see a daily close below 97 to transition below the Ichimoku cloud. this week and next week, because the cloud is actually going to be there as a support pretty much until 24th of November. So that's pretty much your support for the whole month. It's going to be critical if the dollar Swiss and the dollar yen are about to reverse their uptrend. It will need to break a lot of key support level. For the dollar yen, it will need to break 145. It will need to break 143, and it will basically need something to trigger that break. All right, we just don't have that right now. As I say, I don't think the election is gonna matter. I don't think election is gonna be that driver, because if we got the election result tonight, then everyone's just gonna be waiting for that CPI numbers tomorrow. So I might as well wait for that CPI numbers, and that's basically how the market is gonna think. Technically, if we take a look at the technical movement on the dollar Swiss, this has progressed below 100%. All right, so this is currently creating an extension. Take a look at where the 127.2 is. That's going to be at 97.50. Below 97.50, we still have that 161.8%. For this one to traverse towards 127.2 and 161.8, that's actually going to be a lot of support. Now, there are key support at 97.50, and then 96.50 is actually going to be below the Ishimoku cloud. So we could actually push through 161.8. Anyway, isn't it a little bit too late if you are thinking of going short on the dollar Swiss in terms of a swing trade, because we are beyond 100% right now? Okay, on the hourly time frame, this is where we are on the hourly time frame, right? We are also below the Ishimoku cloud. Momentum is ticking to the downside, and this has actually already progressed because we have this, okay, correction that ends at 38.2%. And if we take a look at how the overall break is, this is basically that. So we actually broke below it. Is that a bearish flag? I think so, because in terms of time frame, it should be below, should be within 20 bars. But let me just double check. Yeah, it is considered a bearish flag on the dollar Swiss. So this one has already gone. Now, if you're thinking, you know what, if this breaks to the downside, then could we go for that bit of an extension? You could, but let me flip it for you. Couple of fibs to consider. This would be okay. This would be okay. Both of them are pretty much done. It has touched 161.8%. Can it go even lower? It might. Momentum suggests that it could potentially go even lower, but again, momentum doesn't reflect whatever is going on with price. So the worst case scenario, and considering how we are right now, pre-CPI, etc., we could actually see price bounce back and forth, but not go anywhere. It might not go even lower until CPI number comes out tomorrow. Okay, so you could actually just bounce around back towards previous support level. You could bounce back towards 98.50. It could bounce around 98.25. So there's a lot of scenarios that could happen with the dollar Swiss right now. But all in all, I wouldn't count on the dollar Swiss as something that's super great in terms of range for an intraday trade at this point in time. Okay, so that's my view on the dollar Swiss. If today it breaks below 0.98, then you're definitely going to be looking at a straight move towards 0.9750. That could be your intraday trade, but again, does the momentum suggest that? That's going to be a little bit tough, because that's a huge drop to the downside. Okay, so all in all, if you're looking for a position on the dollar Swiss, you might want to see wait for a break on the other time frame below 98. Then again, if you do that and you go for 98.50, let me give you the stop loss. So if you're waiting for that break below 98, your stop loss is going to be all the way there. In terms of target level, you could be targeting about 97.50. It's not going to give you a good risk reward ratio. You are actually going to risk double, no matter what it is. Okay, so it's not that I'm not giving out trades for the past 2 weeks. It's just, I gave out a few ideas on the Telegram channel yesterday. It's just, it so happens that last Wednesday and this Wednesday, there's a lot of transition going on, and we haven't seen that transition finish off. So I need you guys to be a little bit more careful. Doesn't matter if you trade the fundamentals or you don't, but just want to warn you guys, we got CPI numbers tomorrow. The CPI numbers are actually going to be huge, because the market is actually expecting the FOMC to slow down a little bit with the interest rate hike. right? And that's probably why you see that gain in the risk asset, because the consensus for the CPI this week is actually going to be lower than last month. But the past 2 months, as a lesson, we've got upside surprises on the CPI, so you need to be a little bit more careful with CPI releases. Which indicators? Could you please clarify on that, Mehdi? Chuck, Zeus. We actually did talk about dollar index. That's the first thing I would talk about today. So might want to freshen up on the review, but I don't mind giving you another look on this one here. If we do see a break below 109.50 daily, then yeah, we could potentially be looking at a potential trend change on the dollar index or the dollar overall. Right now, it's a little bit too early to call this a transition in the Ichimoku cloud, because as a reminder, the last time we did transition above the Ichimoku cloud was last time we transitioned below the Ichimoku cloud was mid-January 2022. Now, back then, it stayed below the Ichimoku cloud for 2 days and then it reverses, right? And that's it. We haven't seen any downtrend continuation on the dollar index. So because this move happened pre-CPI, I'm a little bit concerned, because if we have any upside surprise tomorrow, then this might actually bounce back up again. So this is the reason why I'm actually holding back on declaring that the Euro USD and the Pound USD has transitioned, the trend has changed, etc. Because I don't see this across the board as of yet. We've got the Pound USD transition across the Ichimoku cloud last week. We've got the Euro USD transitioning this week. But the dollar index is about to transition 1 day before the CPI number. So if the CPI number comes out bad, and that's going to be bad for the US dollar, then we definitely could see that transition with the dollar index. And do we have room for a lot of push to the downside on the dollar index? Yes, we do. It's just that don't rush into it, because I can't give you a straight answer right now. We might change a little bit on Friday. I might be able to give you a much better answer, but at this point in time, yeah, it is potentially transitioning, but too early to call this transition before that huge CPI numbers tomorrow. Okay, so be mindful, because if you trade without the Ichimoku cloud, you might be able to look at this as a potential ascending channel, and this is no longer a flag. Okay, but this would still be categorized as an ascending channel. It has gone past 20 days, so we no longer call this a flag. All right, so we've gone past that. We are 29 bars. So yeah. Is it too early to call this? Yes. Are we looking at any changes? Yes. Do we look at potential divergences on the dollar index? The sad thing is, no. That's the problem with this. The only thing I can tell you right now is that in terms of correction for the dollar index, so let me zoom in again. All right. The pullback last week was this. This actually got hold up at 78.6%. That's pretty much it. That's basically at 113. Now, if we take a look at the current projections for this, then yeah, do we have room? We definitely have room. If we have a daily close below 109.50, then we could potentially move towards 108.50. We could go down even lower to 107.50. Does the momentum help out with that? Does momentum suggest a potential move lower? Yes, it does. It's just that it's too early. This is pre-CPI. If there's no CPI numbers tomorrow, I would say, you know what, go nuts. You can short the hell off the dollar. But because this is pre-CPI, any upside surprises tomorrow, that could reverse whatever the market has been doing this week. So I need you guys to be really careful. All right, let me go through the questions, but I think I pretty much answer all. So yeah, some of you guys have access to stock CFDs. Some of you guys says it's for MT5. I haven't checked on that one yet. But yeah, I think if you guys are on MT5, you do have access to stock CFDs. So gold done, dollar CAD done, dollar Swiss done, dollar index pretty much done, dollar Swiss done. All right. Any other questions for tonight? Otherwise, you guys need to prepare for the CPI numbers tomorrow. If you guys missed out on that numbers, let me just remind you again. The inflation rate year on year, this is the headline CPI numbers. The headline CPI number is actually year on year. It's expected to go down from 8.2% to 8.8%. So if we have 8% or 7.9%, that's going to be bad for the US dollar. If it does come in at 8.1%, that could actually be good for the US dollar, even though it's actually lower than last month from the previous 2 months. If it's stronger, if the result comes in higher than what the market is forecasting, that could actually drive the US dollar higher. So we could see a little bit of a whipsaw happen. But anyway, if all goes well, then yeah, inflation rate 8.2% to 8%. That's the current projection. We got core inflation rate year on year expected to come down from 6.6% to 6.5%. Right? The inflation rate month on month expected to gain from 0.4% to 0.6%. The core inflation rate month on month expected to drop down from 0.6 to 0.5%. So if you guys think that's actually going to be one numbers to rule them all tomorrow, no. It's actually going to be 4 set of data. So we got 2 core inflation monthly and yearly, and then we've got 2 inflation numbers monthly and yearly. Okay, any upside surprise on at least 2 of them, that could trigger a run in the US dollar. If it's all negative, right, or if it's all as expected, is it's lower or even lower, then yeah, it could potentially drive the US dollar lower, because the market is expecting that with a lower inflation number, the FOMC might slow down a little bit on their rate hikes. We do know that they're actually going to slow down, right? I think they're going to go with 50 in December. I think market has already been pricing in for that. The hope right now that the market has with the CPI number this month is that with the latest CPI numbers, it could potentially persuade the FOMC to be less hawkish. That's kind of the sentiment in the market right now. Okay. So core is key. Yes, for this one, core CPI number is actually key. The expectation is 6.6% to 6.5%. If core drops down to 6.4%, now this is the reason why we're looking at core right now. We know the inflation headline inflation numbers has been dropping down. The core was a little bit unstable. It was picking up and then it was down again. So if the core drives down, that's discounting auto and gas. So I think a lot more focus is actually going to be on the core CPI. But again, we got 4 set of data. We're going to take a look at all 4. Typically, we take a look at the yearly inflation. We kind of ignore the monthly inflation numbers. But from last month experience, the year-on-year inflation was down. But the month-on-month and the core monthly was up. That drives the US dollar up before crashing down the next day. So there was actually a huge whipsaw. We don't want to see that happen, because if we saw that whipsaw happen again, then it's actually going to change a lot of what we were anticipating in the market. So, right now the market does suggest there's a lot of confidence that the inflation number is actually going to be low. That's basically what the market sentiment is telling me right now. And this is where I'm actually going to be extremely cautious. Because if the market is thinking in one direction before a certain big event happen, a certain huge data number comes in, then any slight upside surprises could reverse what the market is doing this week. And that's my only warning for you guys, that any upside surprises, whether it's actually on the monthly inflation numbers, the core monthly inflation numbers, or even the year-on-year cores and the inflation numbers, that could shift whatever the market is doing pretty much since Monday. Okay? So I was expecting the dollar to be weaker. I didn't expect the dollar to be weaker that quickly on Monday. All right, and Monday in terms of the dollar index, the move was pretty huge, right? We actually have a huge drop from 113 to 111. So that's huge. In terms of dollar index scale, if you take a look, if I zoom out, you actually don't see this drop ever since pretty much forever. All right, take a look at the size of that drop. This drop, even if it's only 2 on the scale, that's like about 1.93%. Take a look at the movement here. Pretty much half a year, we actually don't have that huge of a drop. The closest is probably around August, right? Even then, that's only 1.23%. So we actually don't have a huge drop. And the thing with Monday's drop, there's no key drivers for Monday's drop, right? So this is pure risk assets gaining against the US dollar. And that's basically what we saw on the stock markets, probably except NASDAQ. We saw that on the Euro USD, on the Pound USD, on gold, on Aussie, right? We saw riskier assets gain. So there was a positive risk appetite in the market. The thing that I'm really cautious with the run up on Monday, there was no clear driver on what's driving it. So could be speculative, right? And there's no reason for it to be driven that low, especially on Monday, considering that the FOMC was extra hawkish, while the Bank of England was a little bit more dovish. So something doesn't click. And this is why I'm concerned. If the market moves so much before CPI numbers, that's where I'm concerned. If we have that CPI numbers and the market moves accordingly, then I'm completely fine with that. In any case, we are going into the month of November. Is it going to be wild like October? Probably not as much, but do think ahead. Going forward, I think we are going to be looking at a little bit of a drop in volume and liquidity in the market, right? Both in the stock market and the currency market. But typically in November, late November to early December, we actually do see a little bit of a cyclical upturn on the equity market that could help out with the dollar weakening a little bit. Am I seeing the descending channel on the Euro AUD? Euro AUD on what time frame? I'm not seeing anything on the hourly. Oh, this on the daily? It could be. The thing is, I don't think we can call this a flag anyway. So yeah, would I call this a descending channel? It would fall under the descending channel. So yeah, I think we are looking at this as well in terms of momentum. Yes, we could potentially be driven higher on in terms of momentum. Do we have a hidden bullish divergence on this one? It's a little bit too early to call this a hidden bullish divergence because we only have one run. But yes, it will fall under a hidden bullish divergence. In terms of a correction level, I think we're about 38.2%. So all pretty much tick, right? So we are awaiting a little bit of a break to the upside. In terms of a break to the upside on this one, I think this one here is a little bit easier because we can basically look at 1.5550. All right, so if there's a daily close above 1.5550, then yeah, I think we could actually potentially break above that resistance and it would break through that descending channel. Yes, I would classify that, and we are above the Ichimoku cloud in terms of momentum. I think we're good on that one. So you'll see this on the daily time frame. You might be able to see this on the 4-hourly time frame as well. 4-hourly time frame, I wouldn't call this a descending channel, but on the daily, yes, I would. On the 4-hourly time frame, I wouldn't classify this as a descending channel, but on the daily, yes, I would. Okay. All right. Market's going crazy. Let's fight for recovery. I don't mind to see a little bit of a recovery on the Euro USD and the Pound USD, especially leading up to year end. I think it's good. It actually might be healthy, and it actually might be all right, because we actually have pretty much the whole year in a downtrend. So a little bit of a transition, yeah. But think about it this way. I wouldn't classify them as being, in the same trend as what it was a month or two ago, right? We saw a little bit of a transition with the Pound USD and the Euro USD, especially since the fall in early October with the Pound USD. We saw the market react positively, especially after the change in the UK government. So that helps the risk sentiment a little bit. It drives that up a little bit, right? If the market has been dropping down for about 10 months, do I expect 2 months of a little bit of a correction to happen? And is that normal? Yes, I think that's normal. I think that's healthy. Could we see that happen? We might. But again, what's going to drive the market in the next 3 weeks or so until the next FOMC meeting in December? It's going to be that CPI numbers, because we already have the NFP numbers. We're just waiting for the inflation numbers, and we pretty much don't have anything much until the next FOMC meeting. Okay, so think about it. There's going to be a key driver in the market next week, but that's going to apply for the Pound USD unless it's really, really bad. I don't think it's actually going to be that bad. With the autumn report on the fiscal policy so yeah, we'll see what happens with that. That's going to be on the 17th, I believe. Is that next week? It's actually next Thursday. All right. So we did take a look at gold. So if you guys want to review gold, then you can review the video. I think it was discussed about 20-30 minutes ago. Other than that, we can wrap it up for tonight. Good luck with your trades with the CPI numbers. Those on the Telegram channel, I'll keep you guys updated on the CPI stuff tomorrow. And then we have Friday session. I believe, let me just double check what the Friday session is. I think it was currency triangulation, but need to double check. Yeah, it's going to be currency triangulation. That's going to be on Friday. So you guys jump in on last week's currency, the market correlation. Then this is going to be your next step. This is where we're actually going to take a look at the crosses. We'll take a look at the Euro Pound, Euro Swiss, and the Euro Yen crosses. We basically want to talk about crosses this Friday. All right. Yes. All right, guys. Good luck with the trades. Do be cautious for tomorrow's CPI number. If you have a position, do plan it out what you want to do with that position. Okay. Good luck with your trades, and I'll see you Friday. Have a great day ahead.